Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 5th of December. Bit of an outage on the London Stock Exchange today, although difficult to spot given the lack of liquidity that we generally have in the small cap area. And obviously, given the performance of small caps this year, maybe a break of a few hours is no bad thing to ease the pain for many suffering in that space. Starting off with the FTSE 100, you can see that we're just below the 50-day moving average, the blue line there at 74.75. Below that, on an end-of-day close basis, we might have to see another test for support in the 7400 area, although given the state of the other markets that we're looking at the moment, the Dow and the DAX, one would be surprised if there was a fresh breakdown here below support. Above the 50-day line, still looking for up to 76.50 at the top of that falling trend channel from February. By the end of this month, best case would be a move up to that May resistance line projection at 7,800 by New Year's Eve. Moving on to the DAX, where there are no such difficulties. It's been a one-way bet since the beginning of last month and hanging near the highs of the year. We're still looking for up to 16,800 and that top of that May broadening triangle to be hit by the end of this month, and that's valid while we hold above the recent resistance on the way up towards or around the 16,100 area. We're still in the run-up to a golden cross between the 50 and 200-day moving averages, and as you can see from the last month, the run-up to that has, as is normally the case, been the strongest part of the cycle. The Dow is next, and here you can see that we're hanging proud at above the previous highs of the year, around 35,800. Above that particular area, looking for an initial target here towards 36,600. Best case would be up to 37,500 by the end of next month or even sooner. Upside valid while we hold above 35,800. Moving along to Bitcoin, which has been on fire at least to start December. We were looking for 43,000 by the end of November, but missed it by a few days. About the high so far around 42,380, and so a little bit short of where we wanted it to go, but still a chance of 43 or 44,000 by the end of this month once the dust settles above the 40,000 area. Moving along to the stocks, and interesting situation here at Condor Gold. The shares near the low end of the range despite the potential sale or M&A activity that we've got. Broken a line of resistance there from August around 14.5 pence. Above that, hoping for the shares to at least get back up to the old October resistance at 18 pence, backed by bullish divergence in the RSI window, so low for December, but higher RSI trace. Let's see if that works out. On to Cornerstone, where I'm upgrading the recent target. Here we're looking for the shares to hit as high as 20 pence now at the top of that rising trend channel from the beginning of the year. Hopefully we'll see that by the end of this month, especially while we remain above the 50-day moving average around 14 pence. On to a stock which is also looking surprisingly strong, especially given the massive gap down that the shares had back in October. Here we've had a step progression, so vertical, then sideways, and then vertical again. We've been looking for up to 58 pence at the top of that broadening triangle from October. Hopefully we'll get that over the next week or so. If you're cautious, wait for an end-of-day close above the 50-day line. That's around 52 pence, but that chart pattern with those very strong candles seems to be a winner at the moment. Not quite such a winner is Galantis, at least, it hasn't been over the course of most of this year, but we have a sideways shuffle above a 50-day moving average here. That was around 13 pence, and above 13. We're looking for the shares to fill the gap up to 18 pence by the end of this month, maybe even get up to 21 pence on the top of that rising trend channel base from back in May. But the key, as I said, is holding above that 50-day line. We're backed by bullish divergence on this turn, so feeling relatively confident. Maybe a risky call here on the next one, which is Helix Dynamics. Here you can see that we've had a nice W-shaped turnaround there. The neckline resistance around 4.25 pence. Above that, probably looking for up to the October peak there near 8 pence by the end of this month. That's a punchy call. And if you're cautious, you wait for an end-of-day close through the 50-day moving average, just under 6 pence. But it looks as though the shares are on their way with that break of the 4.25 pence area. On to one of the stocks which continues to mystify in terms of the fundamentals. Here we've got Helium 1, which has basically been in a falling trend channel in terms of the technicals since July. We are fast approaching the floor of that channel, 1.9 pence. So people stuck in the stock may see some kind of rebound from that area just below 2 pence, and then a rebound back to the 2.8 pence to fill the overnight gap that we've had. But very disappointing and almost unbelievable how that's panned out, given the hope that there was in July, August surrounding the stock. Next up is IQAI, and here you can see that we've got a bounce off the floor of a rising trend channel in place since the beginning of the year. A bit of a repeat potentially of the Cornerstone chart, and that means that the shares could head towards 6.5 pence or even 7 pence over the next 4 to 6 weeks. Maybe by the end of the next month we're up at 6.5 pence. Be cautious, maybe wait for an end-of-day close through the 50-day line, as that's blocked progress since October. The 50-day line there just above the 4 pence level. Moving on to a stock which has had revealed great fundamentals today, great RNS from on the beach, and gapping up through neckline resistance around £1.20. The longer we stay above that, the greater the chance of a move to £1.80 as soon as the end of next month, which is the top of a broad rising trend channel in place on the daily chart since back in March. On to a stock which is relatively obscure. Hopefully after today it'll be slightly less obscure, PCI. Here we've had a bear trap from below the old support there around 45 pence. The longer we stay above that, and especially the 50-day moving average at 43 pence, the greater the chance of move up to the top of the range there at 56 pence, hopefully by the end of this month. Petrofac is next, and after the pain of last week, we're just still looking for the breakthrough 23 pence. And I said yesterday, I think end of day close above 23, and we could be heading into the low 30s. Hopefully we'll get that end of day close today and stay above. In the meantime, stay above 20 pence, which I think is the new support area for the shares. Rainbow, another great announcement today from the company, really doing very well at the moment, and rising trend channel here from the beginning of the year, top of the channel there up to 20 pence, and the longer we stay above recent support of 14, the greater the chance of 20 pence by the end of the month. Onto a stock where the rug was well and truly pulled at the end of last month. Just the first signs that Totally is trying to get its act together. We had lower lows for December, but higher RSI trace, which is some comfort. But it may take, I suppose, more price action above today's resistance around 5.5 pence to get us back up to the 6 or 6.5 pence area that would unwind that rather painful decline in the last week of November. Finish on with ValiRx, which seems to be quite perky on the latest news. Bear trap gap reversal, so just a little bear trap below the 10 pence level and then gapping up, sharply rising 50-day moving average. Not out of the woods yet, but we have the chance that while we're above 10 pence to head up to as high as 18 pence by the end of this month. But slightly volatile over the recent past, so something to watch out for. That's it from me today. More updates tomorrow.